Welcome back with us, folks. Tonight we are looking at the recovery. The point of this is to show you that sometimes when big news will hit, we will have a drastic drop. What we need to look for is a recovery, but when and where to? And this is what we want to show you here. So this morning we had data, CPI data coming out. And basically what happened was this. We had SPY moving in that direction yesterday. And then when news hit, it just went like this, right? Then there's this huge drop to a certain point. And I can make it even a little longer. This is the rise yesterday. And then it dropped. I mean, we're talking about a huge drop. And then maybe a little bounce, and then it kept on going to the downside. Talking huge drop in the 458 vicinity down to 451. Now, what I want to show you here is this. You need to look at where are we standing. You're not only looking at what's happening here, you have to look that way. What are we looking at? Well, you saw that prior to that, we had a bounce like this, a bounce like that, maybe a little higher, something like this, right? So basically, you're looking at a point where, see this here? We are all on the same line. Maybe I exaggerated a bit here, a little under, but this bounce, bounce through, then bounce on it. So it acted as resistance before, and now it becomes support to the upside. The reason for this is this. Now we're tanking big time, right? We're tanking here. There's a little bounce higher than the support, and then it goes right to support. And then it bounces a little bit. Now you have to think psychologically. If you were a short, you entered a short at this point. Now you're extremely happy about what's happening at that level, right? Think that not everyone is using options, obviously. A lot of people will use short. They will short the stock. And whatever they're doing, once they reach that level, what's going to happen, they need to cover. So if, as a strategy, if you were to short from there to there, this is a 7-point drop, which is excellent. You would probably cover. So when you cover, obviously you're buying the stop, buy to close. It creates volume. This is what I want to share. Let's grow a little bit bigger here. So I'm going to zoom in. There's this rise, this huge drop to a certain point. And then it starts to rise a little higher. This is the stop level. Basically, what it's telling you, because you looked at previous support, if we're losing this line, we are looking at the next line lower for another bounce, another support. However, if it holds, what we're looking at is, you can look at the RSI. It happened so quickly that only the 1 minute and the 5 minute were really affected, but still they were in the 20. I believe the 1 minute was around 13 on the RSI. So this is really, a humongous drop. It needs to rebalance at that point. So what I'm showing you here is at the open, if we were to lose that level to the downside, basically forget about going long. However, it is so extended to the downside, shorts will cover and people will look to get in. And as soon as we start to go to the upside, this is a first back test. It's going to test it, maybe bounce on it, maybe a little higher, and then if it rejects it and comes back down, well, here's your stop, right? So yes, in this case, we can be very quick to get in, because the idea is we need to be as close as possible to the support line that we have. Now, if it bounces and it loses it and it doesn't bounce, it doesn't bounce on the support and we lose it, this is your stop line. However, if it does this and then it kind of goes like this, well, most likely it's not going to wait to stop halfway in this thing. No, where is it going? To the top. So basically what you're looking at, you're aiming at this for a top. We'll probably reject it and come back down. Now remember, we had bad news happening at this level, creating this downside. We are bridging all this gap all the way up to where? To the previous day's high or previous day's resistance. Are we going to cross above and keep going? Well, we need something really out of the ordinary to change that initial mood that was the downside, right? So if you're staying in at that level and expecting for more upside, that's really risky because chances are we are going to bounce on it and turn back down, right? Because unless we have something that is extremely different, something like, oh, sorry, whatever we said here, numbers were wrong and we made a mistake. It wasn't 7.5%, it was 5%. Well, this could change the idea of the whole thing and then we could start rising. But this is not happening. What I'm trying to show you here is, let me get rid of all this so you can understand. When we start rising, your target is the previous resistance. Where did the buyers stop buying while the news wasn't out? Now that the news is out, how did they digest it? They digested it in a very bearish way. People that are okay to buy will be okay to buy as high as yesterday's people, not higher. You understand the psychology behind all this? Now, let's look at a real chart for this idea. Now, this is this morning's SPY chart. See how we had a plateau at the top in the 458 vicinity, and the news hit. It dropped to 452s, bounced a little bit, came back down. Now we're really close to the open, so we want to plan. Let's move this over here. So we want to plan the open, and this is what I was showing you. So let's just put the line there. This is the line at the bottom, very close to the bottom that we had at the after the news hit. This is as low as SPY went. So you do this, and then you move to the left. Yesterday, see how that worked? Oh, see this long wick? This could be a dark pool order, somebody's order getting filled on that same precise line. Let's keep going. Oh, we see this used to be support and then it became resistance. Let's move back a little more. Oh, again, resistance and resistance. So twice, once, twice, didn't work, got rejected, came back down, then tried it, rejected, and then it went through, used as resistance, and then we keep on going. I hope you guys all see this, right? You see this move up to resistance, up to resistance, gets rejected, and then up to resistance again, through it. Now it's becoming support, and then it moves. This is the dark pool that I was telling you about. So basically, we're looking at a line of support that looks or appears pretty strong. So let's use this. So the open, what you do, you're using this line as soon as the gate opens. This is what I'm telling you. We are at the open. If we lose this line, we are under support, and we will look at the next one over. However, we were in the under the impression that we could bounce on this. Like I said, we will have short sellers getting their orders filled for covering their position. And this line, or maybe just a little lower, this line, let me make this a little cleaner here. This line is where you will most likely see hesitation. See this support, under, backtest, and under. So basically, if you had a line chart, it would look like this, and then down, right? So what you're seeing is an area where it tested higher, then bounced. What I want to say is this. If this happens to you, check this out. You want to go to what? No matter where this leads, this used to be resistance, and this is where it went, right? Now, we could have played this on SPY right away. I decided to play something else, and I'll show you in a second. But playing this to resistance, and we could have played the downside from there. Now, we are not crossing over this level unless we have good news or the market changes its mind. And from here to there, we would have had what we had here, a draw and a retest. If we had retested it and then lower and then like this, maybe we could have broken through, but that was not the case, right? Went down, tested a little higher, not much, which was the back test of this, right? So basically we were in this area, in the buyer's area. We broke under, we tested this line and then went down. This is exactly what happened with this. So this would have been a very good entry for puts. And the beginning here, at the beginning of the day, a great entry for calls, making this line your stop line. If we get under that, that's where you get stopped. Now, we played something different. I assume that this one would have been maybe more profitable if we had played SPY, but look at what we played. Now, we decided to play this one, which is Tesla. We played out of the money because they were really cheap, somewhere in the 50-something cents. Why? Because I saw the huge amount of calls going in right at the gate, 2,000 and something calls going for the 1,000 calls. And this is exactly what I said in chat. We are looking at a recovery to the 932 level. This is the 932 level that I had. I was under the impression we would reach. Remember, if you're way out of the money, you're looking at a lot of decay, and this delta is going to go against you as soon as it starts turning around, and you're not going to get profitable. The idea was just to get some of the rise up all the way to this target where it used to be this resistance line, pre-market resistance, and we would reach back up to that. We sold on the way up. We could have gone a little further, and this is the line that we reached the top, and look at why. And if you look back, I mean, this is yesterday's high, this peak after the open. We had a peak, and it's peaking right at the same area. Looking at the chart, I mean, this is your first area of resistance, and then you have, this peak, and then you have this one, and then you have probably the pre-market there, and then there. I mean, you have so many in this vicinity that I thought that it was much safer to sell at this level. Same thing for the downside. As soon as you lose this, see how quickly it went down. As soon as we lost this line, which used to be here was a resistance, it now is very close to support. And as soon as we lost it, that's it. I mean, it's doomed. It's going to the downside. So what I was trying to show you folks is the when we have a huge drop like this, there is a good chance that we could recover to the upside all the way to what? Previous resistance. Keep that in mind. This is a tool you guys should have in your toolbox. Thanks for watching.